Mr. Phillips.
Okay, the topic we're going to discuss tonight briefly is the idea of eliminating property taxes. And when you hear that on the surface, it sounds like a great idea. But we're looking at what might be proposed. It was proposed previously in the form of Senate Bill 76, and there's some serious issues that we have to talk about with that. There's some very undesirable consequences of what it could mean to public schools. So what are the problems with this proposed tax shift? The biggest problem, and I think everybody here can relate to it, is that there's going to be a lot of money transferring from corporations to individuals. Statewide is about $2 billion. It's not going to be paid out of individuals' pockets as opposed to corporations' pockets. In Lebanon County alone, that number is $8 million. Another problem with what they're proposing is where does the money end up? The way property taxes work right now is when we assess the property tax, that all comes back to the Cornwall-Lebanon School District. That wouldn't happen anymore. That money would now go to Harrisburg, and they would decide where the money goes. And based upon the formula that's being discussed, we would receive here at Cornwall-Lebanon about $8,300 per student. Just picked another district for example purposes, being Lower Merion. And if any of you know anything about Lower Merion, they're one of the wealthiest districts in the state. They would get $23,700 per student back from the state. So that's all of our individual money now going to different parts of the state. There's also serious cash flow issues. The way property taxes are assessed and collected, they're 60% of our total revenues, and we have most of that money by the end of August and then almost all of it by the end of October. If you think of this being, it's going to be a transfer to income tax and sales tax to make up the same amount of money that could only be collected by June 30th. So there wouldn't be a way for school districts to be paying their bills between the end of August and the end of June of the following year. A couple more problems. Eventually, districts need to look at their facilities and potentially add a facility or enhance a facility that's currently existing. What they're proposing is that any debt that exists now for buildings that you currently have would stay in place. So there's also a hidden message in there. Even though this is called property tax elimination, there still would be property taxes from every district. In our particular case, Cornwall-Lebanon, it would be about 13% of what your current bill is now. There's other districts where it would be 100%. So what's going to happen is you'll be paying all this additional income tax, additional sales tax, and you still be paying a property tax. Then the further problem with that is the debt will eventually be paid off, but if you have another building project down the road, there is no mechanism in there of how you would be able to raise the funds to enhance any of your buildings. So what happens is, with this is eventually all school districts' buildings would start to deteriorate because you wouldn't be able to create the money to keep them up to standard. And probably the biggest issue here is the 9 folks to my left. They would have very little ability to have much say in what happens anymore. If you're not controlling the amount of funding that your district gets, then you're held hostage to what happens in Harrisburg. And eventually that's probably going to mean certain programs, a lot of the good things we heard tonight, may not be available anymore. I think this is probably the most devastating information. Just randomly picked 4 example residents of the district and what it would look like to them. So if, let's say you have a home that's worth $150,000 and your income reported to the state $70,000, you actually would end up paying $500 additional tax compared to what you pay now. And then because you can't deduct your property tax anymore, your federal tax bill goes up. So all of a sudden that person is paying over $1,000 more. That's a couple more examples at different levels. I won't read through all of them. The one that's interesting is at the bottom. I'll call it big box store, and you could pick a number of those types of entities if you want. They would end up much to the positive, because without a real estate tax, they don't have to pay anything. Now, they would be paying a little bit more in some of the sales tax areas, but they'd be a big winner at $144,000. So therein lies the shift of who's paying the bills and what happens if this does come to pass. So what happens here, I think you saw, is that the big box store is a winner. The federal government's a winner because they're collecting more taxes now from all the individuals and the big box store. So they should really be happy if we would do this. The losers are everybody in this room, individual taxpayers, other than a few certain circumstances if you're retired. And then the local public school districts. This is going to change what public school districts would look like going into the future. So to sum it up, the clamor has been for several years, eliminate my property tax. I don't like getting that big bill in July every year and having to pay it all at one time. The response was Senate Bill 76, and we believe that's what might come back again. And what we're thinking based upon what's in that bill is there's going to be a severe case of buyer's remorse. I asked for this, and once I understand what it's made up of, I don't like it very much. So with that, we want to turn it over for any other comments.
Do we have any questions or comments from any of our school board directors?
Replacement tax changes sales tax and personal income tax. How will our revenue be affected by a downturn in the economy?
That's an excellent question. Right now, the property tax is very stable. So if there's good economic growth or weak economic growth, the property tax is going to be at a level amount. If you go to the sales tax and the income tax, when times are good, there's going to be more revenue for the state to distribute. When times are difficult, there's going to be less revenue for the state to distribute, and you're going to be at their mercy of what you might get in those given years. So that would be a very complicated part of this work.
Mr. Phillips, prior to this school year, we had a budget delay at the state level that was almost 10 months long. In the event that we were reliant in the property tax elimination, can you explain what would happen in that type of situation?
Yeah, essentially after a couple months, no bills would get paid, no staff would get paid, there just wouldn't be any money to run the school district with.
There was no money coming from the state.
Yeah, because you're moving it all to be reliant on the state, and they aren't doing anything, you're not going to have any money to work with.
Kurt, today we have to pass a budget before the state passes a budget. How will this affect us with having to pass a budget when we don't even know what we're going to get from the state? Right now, you can kind of estimate what it is on property tax.
I wish I could answer that for you. It's something I've thought of, and I've heard some other districts are working up a second budget. I personally don't know what to do because I wouldn't know what to expect from the state. So we would have to get some pretty in-depth guidance on what is going to be forthcoming. Like you say, we have to have this done by June 30th. Now, 100% of our budget essentially is unknown, a mystery. I don't know how to answer that one.
Any other questions or comments from any of our school board directors? Ms. Dietloff.
Is there a mechanism in SB 76 or HB 76 to actually regulate distribution of funding? I mean, I've heard some things about it. There's going to be a special commission and it will all be very nicely distributed. Is that true?
I don't think that part in particular is Senate Bill 76. That's something else that they've been talking about. Well, the way I understand this would work is you would have your replacement. If you remember the amount of $8,300 per student that was on the slide not too long ago, that's what we would start with. And then every year there'd be an inflation based on a couple of indexes that your number would increase by.
As long as they have.
As long as they don't decide to, but you're at their mercy 100%.